Hello and welcome to this very first edition of the Argus European Products Update. Every other Thursday I'm going to be bringing you the latest refined product news, as well as looking ahead to what's on the horizon here in Europe. In this first edition I'll be taking a closer look at why the weather this winter is going to have an even bigger impact on the markets than usual. But first, let's get up to date with the overall picture here in Europe with the editor of the Argus European Products Report, Elliot Radley. Elliot, thank you very much for joining me today. November turned into a bit of a month of two halves for refined products.
It was indeed, Tom. Yeah, definitely a divided month. So at the front of November, we had a lot of support, a lot of tightness, and that was driven by a few fundamental factors, I would say. So one of those was congestion and tightness in barge supply in the ARA trading refining hub. We had barges constrained inland because there was low water levels on the Rhine. At the same time, we had energy prices hit record highs, so both electricity and natural gas peaked. And then we had inventories falling to 4-year lows. So we had both gasoline and diesel, I believe, at the start of November, hitting their lowest stock levels in around 4 years. Now, that was driven by the fact that demand over recent months had recovered to pre-COVID levels. So demand was pretty firm by all accounts, but stocks were very low. Refinery maintenance also trimmed away some of that supply. So that combination of factors really supported the market. We saw margins on gasoline hit 4-year highs. But then, as you say, everything changed in the second half. So we had a collapse in crude values. Crude fell off by around $8 a barrel in one day towards the end of November. And products prices came swiftly after. Now, a lot of this was around the surfacing of this new COVID-19 variant, Omicron, and the uncertainty lingers there about what that will mean for demand and just the European outlook going forward.
Okay, so a wild November. Do you think December is going to be any smoother?
Hard to predict, as always, these things, Tom, but I think there are still a lot of uncertainties remaining. We're seeing a lot of volatility in the value of crude, for a start. So really what we need to see is how this COVID-19 variant affects Europe and the wider world in terms of restrictions and demand. We had heard talks of refiners looking to cut runs, maybe by up to 10%, to mitigate some of this decline in demand. Now, if we've already heard talk of that, if we see a return to restrictions across the continent, then perhaps we will see the same. Perhaps we will see refiners look to take individual units off or slow runs for economic reasons. So I think there's a lot of uncertainty. It really hinges on that demand outlook. Equally, the wild card here could be a cold winter. Now, if we see a real cold snap and natural gas prices spike again, that again has a multitude of potential knock-on effects for the refining industry, for the economy, and that really raises the uncertainty stakes here. So it's very hard to say how December will play out. What I can be certain of, though, is that it will probably be another volatile month.
So plenty of work for us to be getting on with then.
Certainly plenty of different things to be keeping our eyes on, yes.
Great to get Elliot's thoughts there. As he mentioned in our interview, one of the main things that European traders are keeping their eyes on at the moment are the long-term weather forecasts. The concern is that a particularly harsh winter in the Northern Hemisphere could stimulate so much demand for natural gas as a heating fuel that refiners will be forced to power their units with heavier alternatives. We've already seen some of this happening in Europe since October's spike in natural gas prices. Since a sustained period of running European refineries on alternative fuels would have a significant knock-on effect all the way up and down the barrel, it makes sense to be prepared for every eventuality. But there is one eventuality that isn't making many headlines, and that's the possibility of a particularly warm winter. The October spike in European natural gas prices was made more extreme by the desire of some in the market to stock up and protect themselves against a cold winter. If that cold winter fails to materialise, then none of the knock-on effects on the rest of the barrel will materialise either, making life much easier for European refiners. Happily for them, most of the latest long-term forecasts for Europe and the US Atlantic coast suggest that this winter will be warmer than usual. Throughout this winter, we'll be bringing you the very best in news, analysis and market commentary, so make sure you follow us on all of our social channels, and I'll see you again next time for another edition of the Argus European Products Update.